Hello, this is Mike Swanson, Wall Street. When I want to talk with you about what's going on in the stock market today, what's leading this rally, and two stocks I bought today. First of all, here's Goldman Sachs. This is kind of the headline of the day. It took a hit on earnings, down 6.82%. And that price drop, because it's in the Dow, is hitting the Dow. The Dow is down 377 points, 1%. But when I look outside the Dow, outside the NASDAQ, I don't think the NASDAQ is down that much today, down 43 points. But I see a lot of sectors up. And that's kind of been the story since October. What got me excited about the stock market, it makes me believe that this is not one of the rallies, a bear market rally like we saw last year, but the start of a cyclical bull market, a healthy market this year, is that most stocks outside the NASDAQ, outside the Dow, outside the S&P 500 are doing great. And they help shift the internals of the market up in October. And right now, I think what we're seeing is the S&P 500 is taking a breather at the green line in this chart, the 200-day moving average. And I wouldn't be shocked if there not much really happens with the S&P and the NASDAQ here for the rest of this week, even if there are headline swings in some individual companies when it comes to their earnings, up and down. Now, two stocks I bought today. One is Eagle Bulk Shipping. Now, I bought two shipping stocks earlier this year. This stock pays a 13% dividend, and you can see it's up today. And that's what I'm looking for, is dividend-paying stocks, because this is in a market environment, as I'll show you in a few moments when you see the software I'm using, that is being fueled by stocks of stable earnings, stocks that pay dividends, sort of defensive type plays, not growth stocks. And I think that's going to continue to be the case, because what we saw in 2020, 21 was a bubble in growth stocks and things like the ARK ETF, much as what was seen in 1999. And when the internet stocks peaked in 2000, money shifted into defensive stocks and industrial stocks. And I think that's what's going on now. And it's going to be the play for the next year or two. Now, I also bought a company you probably never heard of, which I think is this sort of thinking that's going to pay off. Bassett Furniture Industries. Now, they're a furniture company whose headquarters is like 30 minutes from where I live. And I've heard of them because they've been here for forever. They pay a 3.38% dividend, stable earnings, and it's a mid-cap, small-cap company. Market cap's above 100 million, so it's not really a small cap, but a mid-cap. And I've noticed that other stocks other furniture stocks are doing very well. I expect this stock to do very well. So it's a good sector, stable earnings, good dividend. And I think this is the type of thinking that will pay off this year. Think about, hey, what's a company where I live that's stable, that maybe not everyone knows about, but I know it's real. I see it. It's not a crypto coin. It's something that's real. And go look at its stock. If it's above the 200-day moving average and it's not lagging the S&P 500, might be something you might want to buy. So I think it's real world stocks with real earnings, real companies that are going to do well this year. Now, let me talk about global markets, because that's where the action has been outside the U.S. stock market. So I own this. This is EWG. I bought it late October, early November, and it soared. It went up to the 200-day moving average, the green line, which is where the S&P 500 is, paused and soared in January for a big breakout, runaway move. And that's what most world markets are doing. They're already launched into stage 2 bull markets. While the S&P 500 is probably making a transition into one, but most stocks inside of the U.S. stock market have already broken out. So I think world markets are going to continue to do well. Gold and silver, similar situation. You can see from the GDX ETF, which I own in my retirement account. It turned up and it's above the 200-day moving average, even though it's pulling back today. Well, let me show you what's going on with the sectors. These charts are stockcharts.com. They look nice. That's why I'm using them to show you in the videos. This is harder, I know, to see on YouTube, but this is the software I use to see what's going on. It enables me to look through a couple thousand stocks in an afternoon. But here we are looking at the 142 industry indexes, or sectors, as I call them, and we can see what's going on today. While the Dow is down, there is buying in auto manufacturers, buying in shipping stocks, buying in beverages, buying in coal stocks, airport stocks, railroads, REITs, farm products, another REIT sector, hotels, grocery stores, general REITs, business services, consumer electronics, household and personal products, which I think Bassett Furniture, BSET, is a member of that sector. Medical companies, oil and integrated gas, publishing companies, utility companies, personal services. These are all basically defensive sectors, companies that people don't think of as growth stocks. That's what's fueling this market. That's what's doing good today. Now, if we look at the losers today, though, we will see silver, gold, copper, industrial metals. But these are all sectors that have been leading the market up, and they're just down today. Look, I think that the way to do well this year is pretty much ignore the NASDAQ, ignore the ARK ETF, look at the leading sectors that are in bull markets already. The S&P is sitting on the 200-day moving average, but these things launched bull markets. They're already in bull markets. What do you do in bull markets? You buy dips. And if you want to be a buyer of stocks, you look for the things that are already in bull markets, and you buy them on dips. Forget about things that are broken. Forget about crypto. Buy these leadership sectors, because if the market's going to go in a cyclical bull market, it's going to be fueled by these sectors, these defensive plays, industrials. So what happened from 2000 to 2008, the NASDAQ peaked in 2000 and did terrible. It crashed, just like you saw so many tech stocks crash last year and meme stocks crash last year. But in 2000, leadership shifted out of those bubble stocks that were bubbles then and into new things that were stable. That's what's happening now. And people want stability when the economy is questionable. Are we going to have some sort of recession? It's possible we have a slight recession. And when that happens, institutional investors and just investors overall, they want stability. They want companies that can maintain their earnings, maintain their dividend in a more risky environment. So people ask me, how can the stock market go up when the environment's uncertain? The reason why is because money is shifting into stable plays. They're not shifting in unstable crypto, but stable plays. They're not shifting institutional money. It's not going into the ARK ETF. It's not going into fad stocks of yesteryear. It's going into stability. It's going in gold and silver is a safe haven. That's historically what it is. And we got a down day today. So think about that. Now, I'm showing you what's doing well today and what's lagging today. But if we look at the last real top in the S&P 500 was in August. And if we look at what sectors have been doing since August, which includes the dip, which includes this rally, that's where the leadership is in the market. And what do we see? These are the true leadership stocks. I'm not looking at the top one. There's only got one stock in it. Copper, number one sector. Oil and gas equipment, coal, oil and gas drilling, insurance, farming, heavy construction, industrial metals, gold, Interestingly enough, the casinos, but the casinos are an industry that their revenue grew 10% last year, while the rest of the economy or pockets of the U.S. economy were terrible. So it's a growth sector in a dismal stagflationary macro environment. Apparel stores, that's a defensive sector. Beverages is a defensive sector. Steel is a defensive sector. Footwear is a defensive sector. Medical devices is a defensive sector. Oil drilling, residential construction, it dumped because of the raising hikes, but now it's in recovery. Engineering construction, same story. Silver, drug manufacturers is a defensive sector. You get the idea? Defensive sectors, defensive plays. That's what's pushed these averages up, and that's what's pushed the internals up better than the averages. That's where the money's to be made, and they pay dividends. You can find so many of these stocks paying dividends, and I think that's important because look at the last video I did about where I said, if we're in a cyclical bull market, and I think we are, what can we expect? We can expect good gains this year, but next year, not much from the averages, not much. And when you have that year of not much, dividends become very important. So I'm looking ahead, not just to this week, but how can this thing play out? The macro environment's real important there, so that's where I think dividends are going to be even more important. They help this year, but I think they're going to be real important next year to have stocks paying dividends if you want to beat the market. And that's what I'm all about. Look, I made 4.9% in my biggest account last year, real money. That doesn't sound exciting, but most people got crushed. So 4.9% was a big win. And if you can just not lose when the market's down 20%, that sets you up for big returns. When you look at the lifetime of an account, when you lose 20%, 50%, then you've got to claw back just to make back what you lost. So what am I thinking? A lot of stocks are going to go up 20% this year. And I don't think anything's much at all, one way or the other, is going to happen next year. So getting in good dividends now is going to be important for next year. But this year, I think is going to be very fun when you're in the right sectors and the right stocks. And I think gold and silver is an easy play. Emerging markets is an easy play. Foreign markets is an easy play. Goldman Sachs taking a hit today. Tesla takes a hit, but a lot of stuff's doing good. Focus on that. Focus on the leadership. If you like this video, hit like. I'll do more of them. If you want to get the next video, hit subscribe, then hit the bell, and then YouTube will send you an alert as soon as it's up. And if you're not yet on my free stock trading email list, go in the description of this video and subscribe, and you'll get my morning market updates. And I'll be talking with you later.